Hi. So tough acts to follow all around. And a lot of the same stuff that they talked about with employers and employees applies to what we're doing, focused on retail banking and with consumers. So what is Flip? We started here at London Business School's Entrepreneurship Summer School program. I'm not mic'd, I forgot. And what we're doing is actually building a digital retail bank from the ground up, which is kind of a difficult thing to do with retail banking. But it all started here, and so what we did is actually analyze a lot of trends that have come out across financial services and technology, and this is where the idea started. And what did we find? We found that banking customers are increasingly dissatisfied, which is not really surprising given the financial crisis. The other thing we found is that finance and mobile are converging. It makes a lot of sense when we're having conversations with telecommunications companies because they see this as well. For us, we actually realized on our own survey that 60% of customers visit a branch only a few times a year versus 80% use digital online tools. Massive change in behavior for banking and a massive opportunity for us. And so what we actually are doing is building a digital retail bank from the ground up for today's mobile and social consumers. If you do it this way, this is hence the name Flip, you take things in a very different direction. But what does that mean for our consumers and who are our customers? So the social consumer is a very different breed of consumer. These people, just like Costas talked about, are very interactive. They talk with each other, they talk with their networks, they talk with their friends, they look for recommendations even from strangers. And so the paradigm for us has essentially shifted in how do we get to these people? How do we talk to these people? What happens then is they make their own decisions, but they make the decisions through their network. And so instead of engaging with each individual customer, we actually have to engage the entire network so that people share and talk about what we're doing, ultimately to get them to come on board. What this actually implies then is that the way traditional targeting, traditional marketing works is no longer really valid, and it's certainly no longer efficient. Demographic and financial status are primarily used, we used to use in financial services, and most companies still do, to try to segment consumers, right? And so you would take some sort of measure of wealth and then some sort of measure of age, and you would then segment out across that, and you come up with a nice grid. And then the way banking typically works is you would then take your product set and figure out who was going to buy each of your products and try to market to those little clusters. For us, that's not really effective and it's not very efficient because we know that these people are all talking to one another. So what do? We actually are focused on behavioral targeting. There's a lot of this happening now because, not so much in banking because their systems aren't set up to capture the data, but if you build the systems to capture the data and use the data, you can actually target, retarget, and then use your own customers to then spread your message at a much lower cost and much more efficient for us to actually get to these people. The best practices that we're sort of finding as we're building this is, the first is critical. You have to measure engagement, not impressions. And financial services institutions are probably the worst at this because they tend to look at the wrong metrics, I think. The one that they focus on is impressions. And so what you would do is you would send an ad out to the stratosphere, however you do it, and you would look at how many people looked at your ad. Okay, for us, that doesn't really mean anything because, yeah, people looking at the ad is good, but are they interacting with us? Are they engaging with us? Are they actually pulling the trigger and changing their bank account or opening an additional account with us? That's very hard to measure if you do it in the traditional way. So you have to focus on that engagement metric. For us, it means interacting where others blast message. Again, consumers have changed, right? The market has changed. The way that you reach these people has changed and is continuing to evolve. And so you have to be prepared to, instead of just blasting a message out to the market, you have to actually interact with them. And that means in a playful way, that means in a responsive way, that means just like Costas talked about with the lack of attention, right? We have to focus then on how do we engage these people in a conversation, and how do we then take that conversation and do something interesting with it. A lot of what we're doing, we have to focus on the strengths of our marketing partners. That means that my strategy on Twitter is much different than my strategy with LinkedIn, because the way that they segment their own clients and the way that they reach their networks is very different. But it also means that I have the ability with a company like Twitter to what's called micro-target. So I can actually define age, how often you open the app, what device you use, where you're geographically located. I have a lot of data that I can use to then segment our book, our marketing plan, and actually measure that interaction. So it becomes not about impressions, but it becomes a lot more about how much response rate did we get. For us, it means building creative incentives into the operational structure. It means you can actually build marketing in a way that it's encompassed into the operations of the organization. With banking, what we're doing is actually building a random incentives program so that you go to buy a cup of coffee and the bank at random, to you, not to us, will actually pick up the cup of coffee, and immediately, as soon as you swipe your card or do your thumbprint or do NFC, whatever it is, your phone will buzz and it will say, hey, this one's on us. So you focus on social interactions, because then when your phone buzzes and you're with a group of friends having coffee or a pint, then your phone buzzes, what do? Immediately, hey guys, check this out, look, the bank just bought me a beer. We can do that though, right? We have the ability to do it. The technology is there to do it, but it changes the way you build the entire structure of the organization. And for us, the biggest thing that this comes down to then is you have to remain agile, because today's trends are just that, they're trends. So what's going to happen is these continue to evolve. We have to be aware of things like mobile technology changing. We have to be aware of we have to be device agnostic for us. And we have to be ready for things like wearable technology, near-field communication, micro-geo-targeting, all of this stuff. But so you can't build a static organization and a static IT infrastructure and expect to be able to adjust to these things. So that's what's changing for us.